But we want to get to the three things you need to know right now, Brian Stasi, because even more than that economic data today, people are watching two big stocks in particular. Let's start with the first one, and that is Apple. Those shares have been getting hit in the pre-market. They rose after the company's results last night and then fell. At first, investors reacted to Apple's strong second quarter report, which showed it beat Wall Street estimates. There was record quarterly revenue at Apple, as the company had talked about. However, that announcement was overshadowed by the outlook from the company, which said that COVID-19 lockdowns in China could cost Apple up to $8 billion in the current quarter. They gave a range of $4 to $8 billion. Let's bring in Yahoo Finance's Dan Howley to chat more about these numbers. And it's one of these things that you knew was going to be a potential effect, but the magnitude is something else.
Yeah, that's right, Julie. And, it is something that's been impacting Apple. We talk about how they've been relatively immune to the kind of supply chain issues and the chip issues that we've seen impact the entire tech sector. But Apple has been suffering silently with this, mostly on the iPad side of things. That's where they missed some of the revenue for this past quarter, or revenue was lower than expected and prior quarters. And it may be because, and this is what some analysts have predicted in prior quarters, that they're cannibalizing the chips, or they're needing to cannibalize the chips that power those devices, specifically the ones that aren't M1 powered, for other iPhones, right? So they may be using the iPad, stripping out the chips, or using the chips that would otherwise go in them, and ensuring that the iPhone is still able to carry its own weight when it comes to sales. But, that $4 to $8 billion, that's a huge difference from what we were expecting previously, just because of how well Apple has handled this entire slowdown as far as the supply chain goes. And then, there was talk of the kind of weakness or slight weakness we saw in the China market. And so Apple CFO had basically said, look, that's not necessarily a problem with how we're selling. It has to do with timing of releases that they had seen. So from the iPhone 12 to the iPhone 13, there was a lag in between when it was released in China. And so that's why we could see, or could have seen, that weakness in this quarter. But, moving forward, that $4 to $8 billion, that's going to be a big headwind for Apple. And, I think it's kind of just comes as a shock, because they've been posting just record quarters and record revenue for each segment, barring iPad mostly, for the past 2 or 3 quarters, regardless of the pandemic.
Dan, when they dropped that number, $4 billion to $8 billion on that earnings call last night, I was thinking Apple shares are going to open down 5 or 6% today, and it's not. All things being considered, the stock is hanging in there. And you look at some of these notes on Wall Street, I didn't see any downgrades. A lot of the analysts still staying very upbeat on Apple. I look at Deutsche Bank giving Apple high marks for, or actually increasing their gross profit margins in the most recent quarter. Services business continues to grow. It looks like the street is just looking past these cost worries into the back half of the year, where Apple could be launching more innovative new products and giving away more cash to investors.
Yeah, and I just want to point out, for services revenue, margins on that this quarter were 72.6%. So, that's why Apple obviously is really pushing that business more than anything else at this point outside of iPhone, just because of the margins on it. Everything that they're bringing in, nearly 75% is going into Apple's coffers. So it's absolutely a massive win for them if they can continue to build that out. And that's, we're looking at Apple TV Plus, obviously, as being one of those main drivers. I watched Severance, very good show. I cannot recommend it enough. I would sign up for it just for that. So, it is interesting to see that. But on the margins overall, we're 43.7%. I think that's what, Wall Street looks at, obviously, out of a quarter like this, and then recognizes that, Tim Cook basically is the supply chain master here, right? He's the reason why Apple's set up the way it is, why it's managed to persevere despite the issues that other companies have faced in the supply chain because of the chip shortage and because of COVID shutdowns. So I think they just have so much faith in him and his ability to kind of pull out of this, that it really isn't impacting them as much. Plus, when you look at what happened with Amazon and you look at Apple, you're like, oh, okay, yeah, well, maybe Apple's the better bet still.
Dan, Tim Cook equals undervalued asset. Tim Cook continues to get the job done. Dan Howley, thanks so much.